please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, surge in crude prices, hardening bond yields applied brakes on the market's rally today. The indices breached key levels to end in the red. The Nifty opened lower, courtesy weak global cues, but saw a sharp fall in the last hour. The Nifty traded below the 10,240 level. The Sensex too closed over 200 points in the red. The broader markets underperformed today. The mid-cap index broke the 20,000 mark to end about 0.8% in the red. The Bank Nifty was the biggest laggard today, with the index ending with losses of over 1%. Anuj Singhal, as always, joins us with a wrap of today's trading action. Anuj, over to you.
Well, a bit of a crude shock for the market. This morning we woke up with news that Brent crude prices had crossed 65, and that really is something which came out of nowhere because the market thought that the rally was done, but a fresh rally on crude oil really upsets India's macros, and we had the markets closing at the lowest point after a weak start, and the Bank Nifty in particular was weak because not only crude, even the bond yields have been surging, so the macro picture really isn't that great as far as the Bank Nifty is concerned. Oil marketing companies were the top losers, HP, BP, IOC, and other Nifty losers included names like Bharti Infra, UPL and Eicher Motors, but the big drag on the index came from four stocks: ITC, HDFC Bank, Larsen & Toubro and TCS. On the gaining side, you had some stocks like ONGC, Dr. Reddy's and Adani Ports. And outside the index, big losers today included names like Fortis, United Breweries and Can Fin Homes. All in all, keep in mind that we are coming off a 3-day rally. So you would still want to give benefit of doubt to the bulls, but oil becomes the key monitorable now.
Thank you for that, Anuj. But this is a once-in-a-lifetime opportunity to invest in mid-caps and small caps. That's the word coming in from Purinju Velayat, the MD and Portfolio Manager of Equity Intelligence India. He also believes that the bull run is not going to run out of steam anytime soon.
Markets have been bullish since 2013. And I think we might have covered some 20-25% of the bull phase. So there's a long way to go. And now all the eyes are on mid caps and small caps. So this is something very interesting. This is once in a lifetime opportunity in India for the small and mid caps.
Cracks in Britain's Forties oil pipeline in the North Sea have sent crude prices soaring. The Brent crude today has crossed the $65 mark, first time after it touched the same level in June 2015. The jump in Brent also widened its effect on WTI prices that are nearing the $59 mark. However, how long will this rally sustain is not really certain yet, as US output continues to surge, threatening to undermine efforts led by the OPEC to curb oversupply. Moving on to the latest in the Unitech case, the Supreme Court today pulled up the National Company Law Tribunal for allowing the centre to take over the management of Unitech at a time when the top court was hearing the case. Unitech, remember, had moved the Apex Court yesterday against the tribunal's order, which suspended all of its 8 board members and authorized the central government to appoint its 10 nominees instead. Ashpreet Sethi, who has been at the court yesterday and today, joins us. Ashpreet, clearly the Supreme Court is not very pleased with the government taking over Unitech without the court's approval.
Well, yes, some stark observations coming in from the Chief Justice of India-led bench, where they are saying that it's disturbing, in fact, very disturbing, as to how NCLT has passed the order, the manner in which the order was passed, and of course how the government went ahead and moved the NCLT, that is the tribunal, when the highest court of the land, that is the Supreme Court, is already hearing the matter. Now remember, NCLT had given 2 basic orders which have gone against Unitech. The first being that the board members will be replaced by nominees of the government, and second, that they will not be able to sell their assets and even the company's assets. Now this, Unitech has argued in the court, is that NCLT did not hear Unitech before passing the order. There was no principle of natural justice followed. In fact, they've gone ahead and said that the board cannot be thrown to the sea. In fact, Unitech is also claiming that they are already in negotiations as far as raising 750 crore rupees to get bail for the Chandra brothers is concerned, because remember, they are already in jail. These are the 2 main promoters. They're trying to get out of jail. So we'll have to wait and see what happens tomorrow when the Supreme Court takes up the matter again. But there is an indication from the court that there will be some orders where Unitech is seeking an absolute stay on the NCLT order.
All right, thank you for that, Ashpreet. We'll wait to hear more from you tomorrow on that case. But now on to a CNBC TV 18 exclusive, where sources indicate that banks have approached the Reserve Bank of India to keep Jaiprakash Associates out of the second defaulter list, or at least allow an extension for the recast plan approved for the company to go through. Now remember, Jaiprakash Associate is one of the 28 defaulters that were named on RBI's second list, and banks were given time till the 13th of December to resolve the account, else they will be sent to the NCLT under insolvency proceedings. Now, sources indicate to CNBC TV 18 that ICICI Bank and State Bank of India, two of the largest lenders to the company, have sought a special dispensation for Jaiprakash Associates from the regulator, arguing that a recast scheme has already been initiated for this account, and keeping it out of insolvency proceedings will give the lenders more time to implement the plan. Remember, the company has a debt of over 29,000 crore rupees, and by keeping it out of NCLT, banks will also be able to avoid that hefty 50% upfront provision that they have to make if the company gets admitted into the NCLT. Now, the race to acquire steelmaker Monnet Ispat, we understand, is in the final stages. CNBC TV 18 learns that the last date for submission of firm bids for Monnet Ispat, which is currently under insolvency law, is set for today. Sources indicate that the top contenders to acquire the company are Tata Steel and JSW Steel. CNBC TV 18 reported on November 20th that top steel makers like Tata Steel, Vedanta, JSW Steel, Sham Infra Group, as well as Edelweiss, ARC, Blackstone, TPG, SSG were among the various contenders that had shown an interest in acquiring Monnet Ispat at the time. That now, with the deadline for the firm bids closing today, it'll be interesting to see which of these players finally throw their hats in the ring. Remember, Monnet Ispat owes over 10,300 crore rupees to a consortium of lenders that is headed by State Bank of India. Time now for a quick break. On the other side, we'll bring you more news and updates. Stay with us after the short break. Welcome back. Now, the government is all set with the broad guidelines for its Make in India public procurement policy. CNBC TV 18 learns that the DIPP, which is the nodal agency for the Make in India program, has introduced a tit-for-tat clause. So what exactly is this clause? Simply put, entities from countries where Indian suppliers are not allowed to participate or compete in for bids for government procurement may be restricted or excluded altogether from public procurement tenders in India. But there is a sweetener for foreign companies as well. Ronojoy Banerjee joins us now with more on that. Ron, tell us more about what exactly this policy is going to be like.
Well, yes, every year the government procures goods and services worth at least 2 lakh crore rupees. That's the conservative amount. As you said, a clear policy for this was made, and that was cleared by the cabinet in May this year. And some questions were raised over the preference criteria for the government projects, especially the 50% local sourcing or the value addition that was needed from India to be eligible. Now the government will be coming out with clear norms on what the eligibility preference would be. While there is some amount of tightening, there is also some relaxations that have been offered. Let me take you through the details. A, there is likely to be a tit-for-tat condition to bar foreign companies from central government procurement if any Indian company in their country has been discriminated against. They can either be barred from bidding entirely or severely restricted. B, there is also some relief for foreign companies. For instance, if foreign companies guarantee technology transfer to their Indian subsidiaries, then they will be exempted entirely from the local sourcing norms. See, talking of local sourcing and the norms, we understand that local sourcing norms are not going to be uniform for every industry, but will vary depending on 2 factors, primarily the local competitive dynamics of that particular industry and the available production capacity of that particular product. What would be the local content for which product, under which industry, these details will ultimately be finalized by the nodal ministry. To give you an example, the heavy industry ministry will determine many of the questions of local content, who is eligible, who is not, for the automobile industry and the capital goods industry. We learned from sources that a draft of this action plan that has been prepared was circulated among some industries to get their feedback. Back to you.
All right, Ronojoy, thank you very much for bringing us all those details. Now, the wheels are in motion for the expeditious disposal of pending cases against public representatives, that is your MPs and the MLAs. The government today told the Supreme Court that it will set up 12 special courts for the speedy trials for cases involving these lawmakers. These special courts will hear 1,571 criminal cases that are pending against lawmakers at the moment. Now, the government in an affidavit has told Supreme Court that it has readied a scheme for a speedy trial of lawmakers in these criminal cases. They have also allocated funds for setting up special courts. With that, it's a wrap on this edition of After the Bell, but stay with CNBC TV 18. Markets Today Talkback is up next.